Hello and welcome. You're watching BQ Prime and I'm Janani Janardhanan. Thank you for joining us in this special edition on GST. The GST Council meeting's 52nd session convened over the weekend on the 7th of October. We've already discussed much about the rates on millets, on molasses, the clarity we're getting on ENA for human consumption and industrial use. But on this particular session, we want to focus more on the procedural clarities, on the many long pending issues that have also gotten some clarification. I'm being joined by two experts, Mr. Bipin Sapra, leader and indirect tax partner at EY, and Mr. Ritesh Kanodia, partner at Aurtus Consulting. Good afternoon, gentlemen, and thank you very much for joining me today. Firstly, like we were talking, leading up to this, we've discussed much about the rates, but what we also need clarity is on what to look at from here. Particularly, I want to begin with the most talked about topic, the tax demand notices sent to online gaming companies. A tax demand notice of over 55,000 crore, it's being litigated. Writ petitions have been filed in the Bombay High Court by Dream 11. Mr. Sapra, I'm coming to you with this question first. No respite from this particular meeting. The Revenue Secretary has in fact quite strongly held that these liabilities are already existing. How is the industry seeing this?
Very frankly, the industry is worried. You have to realize that ultimately everything depends upon the Honorable Supreme Court's decision on this issue. Whatever the Supreme Court decides will get implemented down. But what you have to realize is that once a show cause has been issued, it has to be adjudicated in a given span of time. Depending on under which section it has been issued, if it has been issued under Section 73, it has to be adjudicated before 31st of December in the normal course. And if it is being issued in Section 74, then there are the guidelines. I doubt the Supreme Court would decide within this short span of time. So what we are looking at is that given that these show cause notices are issued, and more likely than not, these demands get confirmed at the first stage, the assessees or the taxpayers would have to deposit at least 10% of this liability with a limit of there are limits given 25 crores for CGST, 50 crores for IGST. So whatever those limits are, there would be limits which will have to be, they'll have to deposit that. And these are huge numbers. So the industry is really worried on this count and they really need some sort of relief, if not from a show cause notice, at least from the adjudication.
Right. Quickly shifting focus, Mr. Kanodia, the legal battle that will probably protract from this. Concerned industries, an astronomical tax demand, and of course, an upcoming Gamescraft verdict. What would that set the context for? Where will this proceed from now?
So generally, when this amendments were made with respect to online gaming companies, there was a statement made by the finance minister that they always believe that the demand is retrospective. So the show cause notices were anyways expected, and because there was a last date of 30th September, while the show cause notices would have alleged fraud suppression, they still have gone ahead and issued all the notices in a peculiar time-bound manner, because fraud suppression in this matter may be held to be not sustainable. See, the way forward, I think the larger issue that is worrying industry is not the notices, but the value of those notices, because the allegation is that you need to pay GST on the gross value and the gross bet value, and the provisions with respect to valuation just got introduced in the new by way of new notifications. And the contention of the industry is that this is far exceeding their own turnover itself. There was some discussion in the GST Council meeting where the states have requested that let this not be a retrospective tax, and the tax should not be levied for the past period at least. So while I do see Supreme Court, since Supreme Court has already admitted the matter, there is likely to be a litigation around it. But yes, the better way is for the government to come out with some relief, at least for the past. The industries have realized that they will have to gear up and pay the tax, and many have already implemented this. I think what we are looking for from an industry perspective is at least for the past, give the industry, if there is a belief that it is liable, rather than turning into a long-run litigation, give a relief to say that this is not applicable for the past period.
Right. Shifting focus to another important amendment that could have that could get corporates a little worried. Talking about corporate guarantees given when it is going to be independent, an executive director giving a personal guarantee with no consideration, there will be no GST. That's what the council said. But when it is a related party transaction, like a parent company giving to a subsidiary company, there would be the valuation amount would be 1% of the total amount guaranteed, or perhaps the consideration that they're taking, whichever is higher. This is what the council says. Mr. Sapra, coming to you with this question, this is of course a big impact to the working capital of many of these companies. What would be the first estimate? What is the initial reaction of companies?
See, I think most of the companies were aware that corporate guarantee would liabilities in case of related persons are taxable. The question was as to at what rate, and given that the bank guarantee rates vary from 0.5% to almost 3.5%, and the department always tries to get them to a higher rate. There was uncertainty in terms of at what point, at what rate they should pay.
And I think we briefly lost Mr. Sapra's audio. So if you can hear me, we'd like to just come back to you on that question. Mr. Kanodia, what are some of the open-ended questions with respect to this particular thing? Because where do we see this progressing in terms of what are some things that the circular will tell us? There is a circular that is expected on the matter. So what is that going to tell us from here?
So generally, while there is one view that corporate guarantees between related parties were always liable, there is also another dominant view to say that corporate guarantees provided are nothing but a shareholder's function, and therefore ought not to be liable to a GST. There is no service being provided by HO to subsidiary or related party. Typically, what happens in a guarantee situation is that guarantees are provided to the bank. And another debate is whether who is the recipient, though it is always provided on behalf of subsidiary. Now, generally, loan sanction is on the basis of the document of the subsidiary, right? And the guarantees are for default in repayment and not for the provision of loan. That's the one argument that is usually being taken right now. So there are two parts to it. One is many companies have in the past as well gone ahead and paid, while they would have not paid originally. Might have gone ahead and paid later with interest, and because credit was available, they didn't want to get into dispute. There are companies whom I'm aware that are still litigating on this issue to say that this is not liable at all, specifically in cases where credit is not available. The key facet, of course, is what Bipin was talking about, the rate when his audio got disconnected, was in terms of what rate. Because if you look at benchmarking, the transfer pricing benchmarking which companies have done, sometimes it is even 0.2, 0.3%. And there are some income tax judgments which have said 0.5% is an appropriate basis. Now, it is not clear as to how did the government come to a 1%, because 1% would create a huge credit bottleneck for the recipients. And another confusion which is there is now logically this should apply year on year. That is what it seems to be. But there is an argument to say why year on year? Why not at the time of giving the bank guarantee, the corporate guarantee? So this is another point of contention of, do I need to apply only because I'm supporting you for getting the loan by giving my guarantee, and therefore it's a one-time 1%, or is it now year on year? Because if it is year on year, then it needs to be applied to the loan amount each year. So that is yet another issue. What we would see is now, because of while there were notices being issued in the past, but this particular amendment, it's not going to be a clarification, it is going to be an amendment in law by way of a notification where they will specify 1% rate. The question is whether the government will adopt the same rate for the past, where somewhere even taxability is being disputed. You would see enhanced number of notices going out. That's my sense. And now probably they will say 1% rather than any other rate. So that's another issue which is cropping.
So a possible litigation challenge right ahead for the department from that. Mr. Sapra, if you can hear us, I'd also like to hear you weigh in on what you expect to see in the circular. Back to you on that.
Yeah, my audio is clear now?
Yeah, please go ahead.
So I think we should have a clarity as to what Ritesh was talking about. I'm hoping that there would be more clarity. There would also be a clarity that In case the at like whatever is the value which is going to be there at 1%, whether it's going to be there for it has to be applied again and again, and some basis as to why a 1% has been chosen. There would have been some discussion in the agenda and in the basic meeting that needs to come out by way of a circular explaining that, so that the industry is aligned on this issue. Otherwise, it's always open to challenge and litigation, these matters.
So more would lie on that particular circular that is expected. I want to remain with you, Mr. Sapra, on particular to understand the ISD clarification that's also come, the input service distributor. Now, this was already spoken of in the 50th council meeting. We're talking 2 meetings ago. Now, going forward, now it is going to be made mandatory. This meeting has solely made amendments to the CGST law to put that in effect. Now, are companies ready for this? Now, for our viewers, what we mean here is when input credits are transferred from a head office to branch office, it should be very clearly under the ISD mechanism. So, coming to you on the readiness of companies and how they are viewing this move.
So what is going to happen is that the definition of ISD is going to be relooked at. There would be changes in whatever the changes are coming in the section. They should cover changes in how this credit is going to be transferred, because there would be cases like if GST is attributable to a particular location or the particular registration, then obviously the whole credit has to go there. ISD has always been a challenging issue in terms of because it's a separate registration, and to work through that registration, transferring credits solely on the basis of certain on the basis of turnovers or others is always a challenge, and especially in cases where credits are getting lost. There has to be some more clarification in terms of how whether if there's an ISD, there's a cost charge coming in terms of there's a liability which needs to be cost charged also, how the two would really flow side by side. So we are hoping that all of these issues are taken care of when this law gets amended and the necessary notifications are issued.
Right. We've spoken quite a bit about some of the ambiguities that are there, some of the concerns we'd like to be expressed. But I think on the parallel end, there is also some amendments, legal amendments in particular, that have given quite a bit of relief to many of the taxpayers. I'm coming to you, Mr. Kanodia, on this particular part over the amnesty scheme. And, the legal community has said that it is a welcome move. So talking for our viewers, what this means now is there is an extra appeal filing time for orders issued by the 31st of March 2023 till this time is extended till January 31st, 2024 next year. What does this mean for the pendency of writ applications seeking relief, sir? And how do you see this?
No, generally, I think it is a very positive move that the government has done, because there were so many issues in terms of late filing of appeal. So sometimes, let's say the orders were not uploaded or the notices were not received in time. There were many such judgments which were coming to say that what is the right mode of communication of notice, whether it is through uploading or whether it is through physical dispatch, etc. And there are many instances where appeals were not filed on time, leading to a delay, COD applications being filed. If you look at the law, there is only a prescribed time for condonation, beyond which there is no power to condone. So therefore, the only recourse was to go into a writ court asking for a relief. This is a very smart move by the government to say that, fine, you want to file delayed, pay 2.5% more in cash, and you can go ahead and file the appeal, the delayed appeal. Gives a benefit, and you shell out 2.5%, that's true, but at least your right to fight the matter remains, because the next course of action could have been recovery and provisional attachments. In fact, there is another interesting amendment on provisional attachments as well, where the government has said that it gets automatically vacated after 1 year. So I think it's a good move where the right to appeal has been restored, and all these writs will naturally get withdrawn because they have to pay 2.5%. Yes, that's a bit of a cash outflow, but the likelihood of the writ getting withdrawn, etc., is quite large, and appeals will now get admitted and get adjudicated in the due course.
So I'll just take closing comments from Mr. Sapra on how you see, what other moves that, is regarded by the industry as positive moves, or perhaps we've spoken quite a bit about the ambiguities, but your last final thoughts.
So I think in the past also, we have seen a lot of positive changes happening in the GST Council, especially on the law committee side, where the GST Council has stepped out, issued clarifications, measures which would really make ease of doing business better. And so things, a lot like the ISD versus cost charge when it came last time was a really welcome move. Similar issues like amnesty scheme this time and the provisional attachment are really great moves which the industry has really been asking for and will save a lot litigation. I think in case of ISD versus cost charge, the mandatory thing, once the law comes in, I think we'll have a greater clarity in terms of what needs to change. There have been some other changes which are very welcome in terms of, there were some specific changes in terms of where credits are accumulated in case of 9(5), in case of buses. We were aware that there were challenges. So a lot of positive changes have come. A lot are still awaited from the GST Council. I think it's a work in progress, and we keep on waiting for these changes.
Right, you summed it up best. A work in progress. Taxation systems do take time. But thank you so very much, gentlemen, for joining me this afternoon. As always, you can find the full updates on these circulars and more stories that come across on this particular sector on BQ Prime. But with that, it's a wrap from us. Thank you so very much for joining us.
Thank you.